conditions remaining bullish in this bull market. Bull market rank sitting at 25.54 towards the upper end of this range. We're continuing to see some acceleration here in the shorter term signals with momentum in the bullish trending zone, also continuing to see breadth in the bullish trending zone. Both are pretty close to that extreme area, and we're seeing sentiment also improving here as well. Let's take a look at the buy-sell ratio, which continues to be bullish also. We're sitting at 2.22 as of yesterday, and continuing to see green above red, which means bulls are still currently in charge of this rally at this point. We're seeing S&P 500, the SPY, pulling back and finding that support, continuing to find that support range around that 566 area, getting a little bit of a bottoming tail bar right there. Also sitting nicely in the momentum area and not quite extreme. Like to see this hold up. That means we've still got buyers holding in if we can bounce off of this 566 range. If we slide through that area, a couple areas of support that we could test first, this 554 range. If we do slide back down underneath this support area currently, the bond discussion is becoming less and less of a discussion now that we've got the Fed starting to move, and bond market may be anticipating what's happening here. We're getting a little bit of a pullback in the long-term bond. SHY, the short-term bond, continuing to move higher, which is what we want to see. We want to see the short end of that yield curve, which are these the 1 to 3 year treasuries, moving higher. That means those rates are going to be moving lower. Let's look at some of the sectors. We're continuing to see strength overall in sectors. I've got a couple that are just still in that downtrend, shorter term hold signals on healthcare, consumer goods, energy, still lagging, although energy's moved back to an uptrend. We'll look at that. At least the oil play. Gold is continuing to move nicely up another 1.4%, and that continues to be a really strong bullish trend. We are at the extreme range on momentum. Obviously, when you look at that chart, you can see how strong that's been. But potential retracement zone, this playground zone, all the way back to 236, meaning that that range of acceptable volatility and maintain a current uptrend could pull all the way back to 236 on gold. Let's take a look here at silver. Also, nice move in silver up 5%. Keep your eye on SLV. Again, if you want to own silver itself, SLV is an ETF. Everything that we look at here in the market discussion are ETFs. They're tradable. You can go in and buy those in any brokerage account. In this case, this is SLV is the symbol for that, and then USO, which is the symbol for crude oil. Continuing to see a little bit of strength here. We're seeing a move now back up above that 72 range and holding this next rung of support resistance. And so oil is working on potentially creating a new bottom and a new base right here. Let's jump over and look at the muscle stocks of the day. I've got a couple of interesting ones here. MCY, which is in the insurance space, increasing volume over the prior day. Nice confirmation, bullish move, and trending profile looking nicely as it's moving back from that hold range, starting to enter back into that bullish trending range and in that momentum zone at 63. That is MCY, the symbol for that. And then also seeing IREN, which we've had a lot of fun with over the last couple of years on some really big uptrends. This is in the cryptocurrency mining space, so we're seeing a lot of volatility there, obviously, but that might be coming back to life a little bit early, deeper retracement. If we look at that on the 1 year time frame, actually, if we go out even to the 2 year time frame, you can kind of see how volatile that has been, and certainly can get some whipsaws. But a lot of times those trending moves can be pretty significant, and so keep an eye on IREN today and moving forward. That'll do it for today's update. Everyone have a fantastic day today.